We were coming off the worst Thanksgiving trading week in 7 years, leaving almost all of the U.S. indexes negative for the year. And what was thought to be a foregone conclusion of a 10th straight year of positive returns for the market is now in serious jeopardy.
All of the major U.S. indices were negative last week, with the Dow Jones and the NASDAQ down over 4%. The negative performance in the markets last week actually flipped the S&P 500 and the Dow Jones from positive to negative. The NASDAQ still holding up almost 1% for the year. Foreign and emerging market stocks were also down, with foreign down just over 1% and emerging markets down about 1.7%. Now, emerging markets still down over 14% year to date. The chart that we're looking at today is of the S&P 500, and there's been a lot of talk recently about this being the start of a bear market. But I want to focus on the blue box at the bottom of this chart today, which is an important support level that's been put in and has held multiple times this year, as you can see in February, April, and now again today after the October sell-off. If this support level here holds, then we could look at this year as just a year of consolidation where the market cooled off a little bit, getting ready for its next move higher. But if this level doesn't hold, this short-term correction could lead to the start of the bear market.
The major news story from last week was the continued sell-off in the price of oil. We've seen oil come off of its highs by almost 40%, and actually last week we've seen it break below $50 a barrel. Now, we're hoping that the volatility in this index is going to slow down as the G20 summit approaches this week, and I'm sure that's going to be a topic discussed, as well as OPEC has a meeting scheduled for December the 6th. With last week being a shortened trading week due to the Thanksgiving holiday, there wasn't a whole lot of news that came out besides oil, except for earnings season is officially wrapped up. And we've seen year-over-year growth of 28%, and 78% of the S&P 500 companies beat their expectations, so earnings still remain stellar. As I mentioned earlier, the G20 summit is going to be this week, and all eyes are going to be watching the United States and China, as this is their first meeting since the confrontation over trade at the APEC summit.
Also on Wednesday, the Federal Reserve Chairman is supposed to clarify on his comments that he had about a possible slowdown in global growth and how that could affect interest rate hikes for 2019.
Thanks for watching, and we strive to give you everything that you need to know about the markets in 5 minutes or less.
Like our Facebook page and share a video. Thanks a lot.